would like to introduce you to today's speaker, Whitney Crockett. Whitney is one of our audit managers. She specializes in audit of special districts and municipalities. She graduated from Washington State University with a Master's of Accounting degree. She is a certified public accountant in the state of California. Whitney is a frequent speaker of Maze Life. With that, Whitney, welcome, and thank you for teaching the class today. It's off to you.
Cool, thank you. Okay, so in case my PowerPoint does not show up, you'll say something, right?
Yes.
Okay, so let's try this. All right, so today we're going to be talking about GASB updates. So what is coming down the pike in terms of new GASB pronouncements. Again, my name is Whitney Crockett, and I'm an audit manager with Maze & Associates. And here's my contact info in case you want to email me any questions that you have after the class today. So the first one that's everyone's favorite GASB so far this year that has just come out, and this one is effective in fiscal year ending June 30, 2020, so it's effective immediately, is GASB 95, postponement of the effective dates of certain authoritative guidance. So this GASB is postponing the effective dates of the pronouncements that are listed here by 1 year, but 18 months for GASB 87 and Implementation Guide 2019-3. And the GASBs that are covered under this are GASB 83, certain asset retirement obligations, GASB 84, fiduciary activities, GASB 87, leases, GASB 88, certain disclosures related to debt, including direct borrowings or direct placements, GASB 89, accounting for interest costs incurred before the end of a construction period, GASB 90, majority equity interests, and GASB 91, conduit debt obligations. Oh, and GASB 92, Omnibus 2020. And finally, GASB 93, replacement of interbank offered rates, as well as the implementation guides related to those GASBs. So Implementation Guide 2017-3 through 2019-3. So any GASBs that have come out since this GASB, or sorry, before this GASB even, starting with Statement 94, the pandemic was already factored into the implementation dates for those GASBs, which I'll get into in a bit. So that's why those aren't listed here. So in fiscal year ending June 30, 2021, GASB 84, fiduciary activities, is effective, as well as GASB 90, majority equity interests, which is an amendment of GASB statements 14 and 61, and then Implementation Guide number 2019-1. And then in fiscal year ending June 30, 2022, there's GASB 87, leases, GASB 89, accounting for interest costs incurred before the end of a construction period, GASB 92, Omnibus 2020, GASB 93, replacement of interbank offered rates, and GASB 97, certain component unit criteria, and accounting and financial reporting for Internal Revenue Code, Section 457, deferred compensation plans. Except for this one, for GASB 97, paragraph 4 is effective immediately. So it's effective in fiscal year ending June 30, 2020. But I'll talk about that in a little bit. And then in fiscal year ending June 30, 2023, GASB 91, conduit debt obligations, is effective. GASB 94, public-private and public-public partnerships. That's a lot of P's there. And availability payment arrangements. And then we have GASB 96, subscription-based information technology arrangements. So I know some of you on this call will have December 31st fiscal year end dates. So this slide's for you. So this has the implementation years for each of the GASBs we'll be going over. With the fiscal year ending December 31st, 2020, GASB 84 and 90 are effective. And then in fiscal year ending December 31st, 2021, GASB 89. Fiscal year ending December 31st, 2022 is a big year for GASB, a GASB 87, 91, 92, 93, and 97. And then in fiscal year ending December 31st, 2023 is GASB 94 and 96. Okay, so the first one is effective in fiscal year ending June 30, 2021. This is GASB 84, fiduciary activities. And GASB lists several types of fiduciary funds as part of this GASB, including pension trust funds, investment trust funds, private purpose trust funds, and custodial funds. So basically there's two criteria that must be met in order for a activity to be considered fiduciary. And that's that the government must control the asset of the fiduciary, and they also must have the ability to provide the benefits to the recipients. So as long as those two criteria are met, they would fall under this GASB. But I'm not going to go too much more into depth on this one. If those of you that are joining this afternoon's class, taught by Amy Meyer at 2 p.m., she will be going over the details of GASB 84 and GASB 87. So stay tuned for that. It's going to be a good class with some practical examples. Okay, and then in fiscal year ending June 30, 2021, we have GASB 90, which is majority equity interests. And this is an amendment of statements 14 and 61 related to component units. So it's modifying that previous guidance for reporting a government's majority equity interest in a legally separate organization. In that now under this new guidance, a government must have 100% equity interest in order for the component unit requirement or component unit reporting to take effect. And GASB also further defines what an equity interest is as a financial interest in a legally separate organization, evidenced by the ownership of shares of the organization's stock or measurable right to the resources of the organization. So there's two ways of reporting these types of arrangements. There's one way, which would be an investment. So as long as the equity interest, if it meets the definition of investment under Statement 72, then the equity interest should be reported as such. And the measurement of it would be using the equity method. And in this case, there would be no component unit reporting. And then on the flip side, if the interest is reported as a component unit, the component unit should be reported as an asset of the government or the fund that's holding the interest. And also it'd be measured using the equity method. And if it's a blended component unit, the asset and net position associated with the interest should be eliminated during the blending process. So if a local government acquires the 100% equity interest in that legally separate organization, the measurement will be as of the date of that acquisition, and it will include that 100% or all the resources exchanged to complete it. And it should also include any balances that remain from the equity interest asset. And then from that point on, any activity, any flows of the component unit would be recognized as part of that. Okay, and then we have Implementation Guide 2019-1, which is effective in fiscal year ending June 30, 2021. And this is this has 18 questions and answers. So most of them have to do with OPEB, but there's also some about revenue, like sales and pledges of receivables, some fund balance reporting, tax abatement disclosures, and impairment loss, those types of things. Okay, and then this is everyone's favorite GASB, GASB 87, Leases. This will be effective in fiscal year ending June 30, 2022. So just some background on this. Under previous guidance, which is GASB 15, leases were classified as either capital or operating, depending on whether the lease met any of 4 tests. And what ended up happening is that a lot of the lease transactions were being reported differently than similar non-lease financing transactions. So GASB was like, no, let's bring the lease requirements up to par with FASB requirements for reporting leases. So this new guidance will include all lease transactions, so operating and capital leases. And it also further defines what a lease is as a contract that conveys the right to use the non-financial asset for the period of time in an exchange or exchange-like transaction. So that overall determination will depend on the lease contract and whether it does convey that control of the right to use the underlying asset. So basically the distinction between capital and operating is limited, and the lease has to be non-cancelable in order to fall under these requirements. So a couple of questions that have come up related to specific types of assets I just want to cover. So one of them has been, do copy machines apply? So just one thing is that materiality does come into play with any GASB pronouncement. So assuming that you have like the most high-end copy machine or one that does amazing things, it could apply, but you have to walk through the steps to see if, discuss it with your auditor to see if the lease is material, the copy machine lease. And also a lot of those leases include supplies components like toner and paper, and that should not be included in that determination because that's a separate item as part of those agreements. And then also another question that's come up is if buildings apply. So technically, yes, building leases would apply. However, keep in mind that that wouldn't include any maintenance costs that are built into those lease agreements. So you'd have to exclude that. So some other exclusions under this GASB are leases of intangible assets, biological assets, inventory, contracts under the definition of a service concession arrangement, and supply contracts. So for those of you, again, who are attending this afternoon's class at 2 p.m. taught by Miss Amy Meyer, she will be covering GASB 87 in depth. So stay tuned for that.
Okay, so are we ready for our first polling question?
Dun, 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 dun. Yes.
Okay, so as I'm launching this polling question, please remember to answer it if you would like to get your CPE credit, but a couple of housekeeping items, and then we also have a question. So we are trying to send that, if you haven't received the PowerPoint yet, because the file is pretty big, even the zip file is like fairly large. So what we are going to do is that we are going to send everybody a link so that you can download it at later today. And I apologize for the inconvenience if you haven't gotten it. And then we have a question. For GASB 87, can we do early implementation?
Yes. With any GASB, you can do early implementation. But do keep in mind that with GASB 87, you will have to restate. So if there's any transactions or any leases that are effective in the beginning part of the fiscal year, then you would have to restate for those leases.
Okay. All right. Are we ready to end the...
Continue?
Yes. So let me end the polling. If
Okay.
you do not see the question, please let us know in the chat so we can still give you credit. All right. So everybody is
perfect. Wow. So the correct answer is an activity where the local government does not control the asset of the fiduciary.
Perfect.
So yeah.
Good job, everyone.
Yeah. Okay, so let's continue. So GASB 89, accounting for interest costs incurred before the end of a construction period, is effective in fiscal year ending June 30, 2022. So in case you were hoping to stop capitalizing interest on construction projects in your enterprise funds, this GASB is for you. But basically, those entities that have a business type activity or enterprise fund had the option of capitalizing interest costs incurred before the end of a construction period as part of the cost of the related capital asset. So with the application of this statement, organizations and funds should now expense this interest cost. So no more interest capitalization is required. So this one is unique in that GASB has said if you were doing this, if you were capitalizing that interest, that to just stop doing it, and there's no need to restate or anything, just stop doing it and move on. But their thought process behind this is that those interest costs weren't providing any value to the capital asset. It's more of a financing activity as opposed to capital. So it should just be expensed as incurred. Okay, and then in fiscal year ending June 30, 2022, we have GASB 92, which is Omnibus 2020. And this is a hodgepodge of clarifications to previous pronouncements. And the most notable one that this GASB corrects is GASB 87, Leases, but it also goes over some clarifications of intra-entity transfers of assets between a primary government employer and a component unit, and then reporting assets accumulated for post-employment benefits, and the applicability of GASB 84 for post-employment benefit arrangements, and some other things like reporting of recoverable funds from excess insurers and some fair value considerations. And then we have GASB 93, replacement of interbank offered rates. And this is another one effective in fiscal year ending June 30, 2022. So some of you might not have derivative instruments, but if you do, this will apply to you, or if you enter into any in the near future. But some governments have entered into agreements in which variable payments are made or received depending on interbank offered rates, which is known as IBOR. Most notably, and the most common one that we see is the London interbank offered rate, which is LIBOR. So as a result of global rate reference reform, LIBOR is expected to cease to exist in its current form at the end of 2021, which is prompting those agencies that use it to amend or replace those financial instruments for the purpose of replacing LIBOR with other reference rate. So the options are to either change that reference rate or add a change back, or adding or changing fallback provisions related to the reference rate. And the previous guidance was under Statement 53, accounting for derivative instruments. And what that GASB requires is a local government to terminate hedge accounting when it renegotiates or amends a critical term of a hedging derivative instrument. So in this case, it would include the change of a reference rate like LIBOR. So taking that into consideration, and also taking GASB 87 Leases into consideration, because GASB 87 has some considerations about if there's a replacement of a rate on which variable payments depend in a lease contract, it would require a local government to apply the provisions for lease modifications under 87. And this would include remeasurement of the lease liability or lease receivable. So that's what they're suggesting people do to record this change of the reference rate.
Whitney?
Yeah.
There is a question. We have one audience member that raised her hand. Okay, Gloria, I'm going to let you can speak now. I think I am muted. Okay, go for it. Does it work? Gloria, I don't know. I think you may have, I cannot unmute you, so you may have to unmute yourself. Okay, so let me see. Gloria, can you? Okay, so we may be having some difficulties because I cannot unmute the person that has a question. So,
Okay.
all right, maybe you keep going and then we'll figure it out.
Yeah,
And
just
Gloria, yeah, and then you can feel free to type the question on the Q&A also.
cool. So yeah, that's pretty much it for GASB 93. Oh my gosh, my thing isn't working. Let's see. There we go. Okay, so in fiscal year ending June 30, 2022, we have GASB 97, which is certain component unit criteria and accounting and financial reporting for Internal Revenue Code, Section 457, deferred compensation plans. So this is the one that I said is partially effective immediately. So the first 2 points that I'll be talking about are effective this fiscal year. So a fiscal year ending June 30, 2020. I guess we're in 2021 now. So fiscal year ending June 30, 2020. Yeah. So in certain instances, a legally separate organization doesn't have a governing board. So for purposes of determining whether a primary government is financially accountable for a potential component unit, if the primary government performs the duties that a governing board typically would perform, the absence of a governing board should be treated the same as the appointment of a voting majority of a governing board. So essentially it doesn't have an effect, a major effect. And then the financial burden criterion in paragraph 7 of GASB 84 is amended to state that it is only applicable to defined benefit pension plans and defined benefit OPEB plans that are administered through trusts that meet the criteria under Statement 67 and 74. So the biggest change for those of you in California is that PARS, if you have a PARS OPEB trust and you're presenting it as a fiduciary fund in your financial statements, that it should no longer be reported as a fiduciary fund. So that's the big change. And the reporting will be similar to that of, for those of you in CalPERS, the CalPERS Trust, CERBT, CERBIT, it'll look similar to that. Then the other thing that is covered, so again, those first things I just discussed are effective immediately. So the Section 457 plan items, those are effective in fiscal year ending June 30, 2022. And basically this GASB just is saying that those types of plans should be classified as either a pension plan or another employee benefit plan, depending on whether the plan meets the definition of a pension plan under 67, 68, and 73. So if it does meet a definition of a pension plan, it should be treated and reported as such. Otherwise, it should be reported as just another employee benefit plan. And then the final pointer for this GASB is that if the deferred compensation plan is a fiduciary type of activity, that you should report that plan as a fiduciary activity in your financial statements, in your fiduciary fund statements, that is. Okay, and then we have GASB 91, conduit debt obligations, and this is effective in fiscal year ending June 30, 2023. And this is, the objective of this is to provide a single method of reporting conduit debt obligations by issuers. So it's really just a note disclosure item. But basically, there's 5 characteristics that GASB says must be in place in order for a debt to apply. The first being that there must be 3 parties involved: an issuer, a third-party obligor, and a debt holder or debt trustee. Second, that the issuer and the third-party obligor must not be within the same financial reporting entity. The third requirement is that the debt obligation cannot be a parity bond of the issuer, nor can it be cross-collateralized with other debt of the issuer. And the third-party obligor must ultimately receive the proceeds from the debt issuance, as opposed to the issuer. And then the final requirement is that the third-party obligor, not the issuer, is primarily obligated for the payment of all amounts associated with the debt obligation. So that's the debt service payments.
Okay, Whitney,
Mm-hmm.
there is a question.
Okay.
What is the criteria for a 457 deferred compensation plan to be considered as pension plan?
So I forgot to say on this one too, Amy Meyer's class will be going in depth about this also this afternoon at 2. But basically if the Section 457 plan meets the definition of a pension plan under statements 67, 68, and 73, it should be reported as that. So you kind of have to compare the terms of your plan. So the agreement or whatever benefit you're providing, compare that to those GASB requirements to see if it would apply.
Okay, there's another question. For GASB 84, both now and when GASB 84 is implemented at June 30th, 2021, can you clarify how to report 1, PARS trust plan for pensions, 2, and how to report PERS Cerbert plan, and 3, 457 401k type plans that are defined contribution plan? It's a very long question, so I'm going to put it on the Q&A.
Oh, is it in the chat?
Yeah, I'll put it in here. Oh, I cannot put it in there. Actually cannot post question on the
Here, let me open up the chat.
Q&A. Yeah.
Oh, I can see it. Okay.
Yeah, I just want the other people to see it, so I'm going to repost this so that people can see this. Okay.
Okay, both now.
Okay, I'm gonna post this. Can you see it, Whitney?
Yeah.
Okay, cool.
Okay, so should I start on answering?
Sure.
Okay, yeah. So the question is for GASB 84, both now and when GASB 84 is implemented, can you clarify how to report? So I'll start with the first one, PARS trust plan for pensions. So PARS trust plans for pensions, I believe are, David, correct me if I'm wrong, but I think those are reported not as fiduciary funds.
Correct. We'll be showing the cash in the cash footnote and disclosure in the pension footnote, but with the 84, that'll be dropped off as a fiduciary fund, or if for the OPEB part, it would be dropped off if it was previously reported as a fiduciary fund, but the pension side wouldn't have been there.
Perfect. So the second part is, and how to report PERS Cerbit plan. So that's also not reported as a fiduciary fund. So you would include it. It should be part of your GASB, I guess Cerbit is OPEB. So GASB 75 disclosures. So it'll be offset. The net OPEB liability will include the balance of the trust.
Correct.
Or be offset with the total OPEB liability. So no separate fiduciary fund financial statement reporting. And then section 457, 401k type plans that are defined contribution plans. So again, I think you might want to check on that to see if it is a defined contribution plan, it might fall under the fiduciary accounting rules. So you might have to disclose it as a fiduciary fund.
It partially depends on how the trust was set up and the governing body. So we would need to get those information as well.
Okay, yeah. So that one is a little bit more of a research kind of item. So I think that's it. So I'm just going to.
Okay. Yes, please do.
Okay. So yeah, so for GASB 91, so again, it's just a note disclosure, GASB. There's some additional disclosures that will apply, including a general description of the issuer's conduit debt obligation, a general description of the issuer's limited commitments and voluntary commitments and additional commitments. So some of the additional commitments will include the legal authority for extending commitments, the length of time of the commitment, and arrangements, if any, for recovering payments from the third-party obligors. And then finally, the aggregate outstanding amount of all such obligations should be reported. in your disclosure. And then finally, if you have recognized a liability, there's additional disclosures. This would be a really unique situation, but there's additional disclosures that would be similar to those for other types of debt.
Okay, are we ready for another polling question?
Yes, dun 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 dun.
So what is your favorite GASB?
Not
34?
GASB 34. GASB 34.
I say 95. That's my favorite.
Wow, it's really a tie.
What? 34? Really? Oh, you guys are so dedicated to your
I
profession.
think 95. Yeah, you're right. 95. Postpone everything.
That one made me smile this year.
Yeah. Somebody say none of the above. Yeah, I don't blame you.
Done with it. Yeah.
I hope the GASB 100 is a memorable one.
I think
like-
what about GASB 89 where it just says stop? Stop
Oh,
stop
that's
accruing
true.
the interest. That was the one that Mr. Bean at CSMFO loved because it's just stop.
Stop doing it.
No
is true.
retro,
Okay.
no nothing.
I love
Okay.
that. Too.
So we're gonna end the poll. If you haven't seen, if you cannot see the question, please let us know on the chat. And then let's see who's. Let's share the results. Wow.
So 36% said 95. I would say the same, but you know, I respect you, people that did the others, especially GASB 34. That's amazing.
So
I think I forgot what GASB that is. No, I'm just kidding. Okay.
so I personally think 68 was more confusing than 34, but maybe I was so young I didn't know better. But
Probably.
okay, all right.
Okay. So then we're moving on to fiscal year end date June 30, 2023. And this GASB is it's a unique one, but I think, well, let me just talk about it first. So GASB 94, public-private and public-public partnerships and availability arrangements. So I think for most of you, unless you are a county or a state or a higher education institution, I don't think this GASB will apply, but I still want to talk about it. It basically is addressing a gap in GAAP. So what they found when they were looking at service concession arrangements, which is GASB 60, and leases, GASB 87, is that there's certain arrangements that don't fall under either of those GASBs. So the purpose of this is to make a special GASB for those other special arrangements. So basically this will supersede GASB 60, accounting and financial reporting for service concession arrangements. And there's two different types of arrangements. The first is a public-private and public-public partnership. So because I can't say that very fast, I'm going to just call it the triple P. And that is an arrangement in which a government, the transferor, contracts with an operator to provide public services by conveying the control of the right to operate or use a non-financial asset, such as infrastructure or other capital asset. And that's the underlying triple P asset for a period of time in an exchange or exchange-like transaction. So what I'll get into in the next slide is how service concession arrangements are also a triple P arrangement. And then the second type of arrangement is an availability payment arrangement. And this is an arrangement in which a government compensates an operator for services that may include designing, constructing, financing, maintaining, or operating an underlying non-financial asset for a period of time in an exchange or exchange-like transaction. Okay, so like I mentioned before, some triple Ps meet the definition of a service concession arrangement, which the board defines as one in which, one, the operator collects and is compensated by fees from third parties. Number two, the transferor must determine or they have the ability to modify or approve the services that are to be provided, to whom those services will be provided to, and the prices or rates that should be charged. So the key here, and then the third thing is the transferor must be entitled to significant residual interest of the underlying asset at the end of the arrangement. So the key here is that the transferor has the ability to make the decisions, not the operator. So that's where the gray areas come up with some of these types of arrangements. So that's really the key there. And also there are situations where a triple P meets the definition of a lease. And in these situations, the application of GASB 87 would apply in certain situations. And if the triple P does not meet the definition of a service concession arrangement. So for all other triple Ps, the accounting is going to be similar to that under GASB 87. And again, a lot of the illustrations in this GASB will apply to states. For example, bridges and tunnels being the most common. And also another example I've seen is student housing and student parking as part of higher education institutions. Okay, and then this statement also provides guidance for availability payment arrangements. And those are a bit different in that they are an arrangement where a government compensates an operator for services that include or may include designing, constructing, financing, maintaining, or operating an underlying non-financial asset for a period of time in an exchange or exchange-like transaction. So this type of arrangement is dependent on the asset's availability for use rather than the use itself. And in this type of arrangement, typically a government will procure a capital asset or service rather than receiving compensation to allow another entity to provide those services. So it's a bit different. Okay, then the next one, effective in fiscal year ending June 30, 2023, is GASB 96, subscription-based information technology arrangements. So this statement is defining what an SBITA is and also establishing that an SBITA is a right to use subscription asset, which is considered to be an intangible asset, as well as a corresponding subscription liability. It also provides capitalization criteria for outlays other than subscription payments and requires note disclosures regarding an SBITA. So under this GASB, an SBITA is defined as a contract that, again, conveys control of the right. That's always a common thing in these agreements. Conveys control of the right to use another party's information technology software alone or in combination with tangible capital assets as specified in the contract for a period of time in an exchange or exchange-like transaction. So the subscription term should include the period during which a government has a non-cancelable right to use the underlying IT asset. And it should also include any periods covered by an option to extend or terminate the agreement depending on what is more reasonable or expected. So just to give some ideas of what types of arrangements would fall under this GASB, there's one called software as a service, which is SaaS. Then there's infrastructure as a service, which is IaaS, and platform as a service, PaaS. So in terms of recording this type of arrangement, a government should generally recognize a right to use subscription asset, which is going to be, again, an intangible asset, and then a corresponding subscription liability. So first, let's talk about for the liability. So what is that going to entail? The subscription liability should include and be initially measured at the date when the subscription asset is placed into service, and its value is going to be based on the present value of subscription payments expected to be made during the subscription term. And the discount rate for that should be the interest rate that the SBITA vendor charges the local government, which could be implicit or the government's incremental borrowing rate if interest rate is not readily determinable. So after that subscription liability is booked, going forward, the local government should recognize amortization of the discount on the subscription liability as an outflow of resources. So for example, interest expense in subsequent financial reporting periods. And then we'll get into, so after the liability is booked, the subscription asset should be booked as well. And that's going to be measured as number one, the sum of, the sum of number one, the initial subscription liability amount. Number two, any payments made to the SBITA vendor before commencement of the subscription term. And then three, capitalizable implementation costs that were incurred before it was placed into service. And then that intangible asset will also be amortized as an outflow of resources over the subscription term. So this GASB does require also a restatement for arrangements in place at the beginning of the effective fiscal year. So that's important to keep in mind.
Okay, polling question. Last polling question.
Dun, 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 dun. Oh.
Is a restatement necessary under GASB 96 if a subscription-based information technology arrangement exists at the beginning of the fiscal year? I think you just gave the answer in there. Like
I know, I put a bad, this was a bad
15
place.
seconds ago.
So hopefully you had your cup of joe so you can answer this.
I know people are very enthusiastic that it's still coming in.
Get those votes in.
Yes. Then we'll know if you're paying attention. Whitney gave out the answer like 15 seconds before this was launched.
I even forgot I said it.
Yeah. Hopefully I heard it right. Like if it is completely the other way,
I would
then,
hope.
you know, yeah.
Yeah.
Okay, 3 more seconds. If you haven't seen the polling questions, please let us know on the chat and we'll give you the credit. All right, let's end this.
Okay. So most of you answered correctly. Yes, the GASB 96 does require a restatement if you have this type of arrangement. But again, I don't think, I don't remember if I mentioned this, I don't think a lot of you will have these type of arrangements. If you do, that's really interesting and you should definitely email me or us about it because I'm curious to see what kind of things you guys are doing. But yeah, that's pretty much it for GASB. So now I'm going to talk about a couple of COVID-19 impacts on certain transactions. So some of you that were in Russ Branson's class yesterday, or sorry, it wasn't yesterday, it was Monday. He went over some resources that are available to some of you depending on the needs of your organization. But I just wanted to point some of them out on here as well. GASB does have one called the Emergency Toolbox, and this one's pretty cool because it has quick references to the codification sections for various topics that might be applicable to you this year, such as uncollectible amounts, accounting for that, contingencies, and also some fair value considerations. So that one's a really nice quick snapshot resource. And also GFOA has a couple, including the GFOA Fiscal First Aid Resource Center and the GFOA Coronavirus Response Resource Center. So when you get your slides, these, I don't know if you can see my pointer, but if you click on the highlighted, underlined hyperlink, it'll bring you to that resource. Okay, and so some of you might be, depending on your agency, you might be exploring different options available to you and the best suited one, especially if you're expecting, significant decreases in revenue. And you might be considering or toying with the idea of using reserves. Just some examples of some reserves might include like general fund reserves, other fund reserves, or contingency reserves. So if this option's used, just be aware that they may have related policies of when you can and cannot use them. And also the policies that you have may have requirements for replenishing or funding the reserve should they be used. So depending on the use for them, your financial report may need a disclosure to discuss your use of the reserve and potentially your plans for replenishing or future funding of that reserve. So something to just kind of put out there. And then also if you might also be thinking about your sales tax revenue year-end accruals as you're closing your books this year. So I just wanted to revisit some of these transactions. So remember that if you have a governmental fund, if you receive the sales tax money within the modified accrual period, the sales tax revenue should be accrued as revenue. Whereas if you do not receive the sales tax revenue within your modified accrual period, it should be offset with a deferred, the receivable should be offset with a deferred inflow. And then also, some people might be thinking about changing the modified accrual period, but keep in mind that if you do that, you should only do so if it's going to be the best, long-term decision for your agency. So it shouldn't be just done for your current year needs. And that it also, if you do change it, it should cover not only revenues, but expenditures. And you will also, your auditor may need to denote this change on the opinion letter, the audit opinion letter, and the required communications. And then in terms of disclosure, you may also have to report the change in your summary of significant accounting policies in your report. But yeah, that's all, folks. So if anyone has any questions, feel free to put them in the chat. Or not chat, sorry, Q&A. Do we have any more questions? Let's see. Yes. Or let me see. Okay, so, maybe Catherine's answering these.
Will the recording be sent out? Yes. So what we are trying to do is we are trying to wait for all 6 of the classes to finish so that you don't get 6 emails for the recording. So we will just send 1. So that should be coming out later, after Friday or, next week.
Cool.
Any other questions? No? Okay. So once again, thank you for coming. What we're going to do is we're going to send out a link later today for you to download the slide. And if you have any questions, please email us. And we also have a class at 2 o'clock that will focus on the lease and also the fiduciary activities GASBs. Well, thanks for joining us today. And I hope you all have a great morning.
Thank you. Bye, everyone.
Bye-bye.